Hi, my name is Fahim, and today we will talk about the changes in the tax year 2014. There are five different things we will talk about today. Number one is net investment income tax, NIIT. Second one is same-sex marriages. Third one is health insurance premium tax credit. Fourth one is additional Medicare tax. And fifth one is alternative minimum tax. Okay, now net investment income tax, NIIT. The rate for net investment income tax is 3.8%, and it's applicable on the investment from individual, state, and trust. Please note that it's completely different from your additional Medicare tax. There is different calculation for that, and there's different prerequisite for that. So it may be you are subject to, it's possible that you may be subject to net investment tax, or maybe to additional Medicare tax, or maybe to both. So that's different cases. It may be applied to you or not. Okay, the net investment income tax does not include and does not apply on wages and salaries. It's the Medicare tax which apply on wages and salaries. It's effective from Jan 2013. Okay, the threshold level for an NIIT is, if married jointly, is 250,000. If married separately, it's half, 125,000. Single, 200,000. Head of household with dependent, 200,000. Qualifying widow with dependent, 250,000. Note that if you are married, you can't file it as a single. You have two options to file, either married filing jointly or married filing separately. Okay, now the same-sex marriage. In 2014, there is a new rule which states that the same-sex marriage and the opposite-sex marriage have the same rules. Now we will talk about what are the rules. Okay, the marriage. According to the marriage, the definition of marriage for the federal law is that that individuals and both individuals should be married, lawfully married in a state. So if you are married as a same sex, you should marry in a state which allows same-sex marriage. And it does not matter that if you now shift to any other state which does not allow same-sex marriage. For federal income tax purpose, you can file joint return unless and until you are married, you were previously married in a state which allow the same sex. Okay, one more thing, domestic partnership agreement. There's some agreements, domestic partnership agreement in a state which is not considered as marriage for federal purpose, federal taxation purpose. So you can't file joint return on domestic partnership agreements. Okay, health insurance premium tax credit. This is a new one which began in 2014. Okay, the amount of credit is based on the premium you pay, and the premium should be paid by employee, not employer. And if the employee pay the premium and reimburse from the employer, then this case don't apply. It's just you have to pay all the expenses of the premium from your pocket. Okay, to avail the credit, this credit is especially given to the low income individuals, and you can avail this credit. You have two options to avail the credit. Now what's happening here is government wants everyone to get the credit. For that purpose, the individual can go to the marketplace and provide some income information to the insurance provider, and the insurance provider will calculate the health insurance premium tax credit for that person. And he has two options. Number one option is he can deduct that credit in advance from the premium. Number two option is he can claim all the credit with the return, annual return. Now note that if you exercise number one option, then you need to reconcile your credit you have taken in advance with the actual credit, because the credit which you have taken in advance is an estimation. So you need to match it out, you need to reconcile it, that what was actual and what is an actual and what was the estimate, because there may be a case that you have more credit left and you can take that additional credit from the government. Okay, the limit for insurance premium credit, it should be within the range of the poverty rates, and the range is 100% to 400% of the poverty rate. Okay, I don't have the range for 2014, but I have the range for 2013. Now the poverty rate for 2013 was 11,440, which is 100%, and if you make it 4 times, it's 45,960. It's for individual. Similar rates are for family of 2 and 4. It's a different rate added for 2000, so family of 2 and 4, which you can see on the screen. Okay, additional Medicare tax. The jury decide that this tax will stay with us, which will hurt many families. Now it apply on wages, railroad retirements, and self-employment income. See, I told you that additional Medicare tax is applicable on wages, railroad retirements, self-employment income, while the NIIT is apply on investments from individuals, trust, state. It's completely different, and the calculation is also different. So don't mix this additional Medicare tax with your NIIT. Okay, employer is responsible to withhold annual medical tax in certain cases, and I just forgot to mention the threshold level. The threshold level is 200,000 for the Medicare tax, and the rate is 0.9%. Okay, now that's important thing, that the Medicare tax is applicable on the amount above the threshold level. For example, if the threshold level is 200,000 and your income is 250,000, then the rate of 0.9% will be applicable only on 50,000. Okay, alternative minimum tax. Now this is another rule that states that you have to pay actual or alternative minimum tax, whichever is higher, which means, for example, if your alternative minimum tax is $2,000 and your actual tax is $1,500, now you have to pay $2,000 even if your actual tax is $1,500. So you have to pay the higher of actual or alternative minimum tax, whichever is higher. There are certain exemptions. For single, 52,800, and for married, 8,200, 82,100. Sorry. Okay, thank you very much for watching. If you have any questions, let me know.